The earnings season is going to be key on so many levels, but just how much clarity are you going to expect from all of these earnings reports?
Look, I think right now that there's a real mix. If you look, for example, at some of the highest PE earning sectors, you're talking about technology, communications, and like you said, they've not only kept, they've remained expensive, and in fact, they're expected to continue to be quite good in terms of the earnings season. Now, of course, retail, consumer discretionary, even parts of staples are actually having a very hard time. And, that segment I'm not sure that that's priced for what is about to hit in terms of earnings.
All right, so let's talk about what then is priced in terms of the hit to earnings. There is an argument here that we've seen a massive decline from peak to trough in terms of the overall market that has already priced in a good amount of that. How much more or how worse could it get as we start to see this earnings season progress and companies actually report what their outlook is?
Dom, I think that's going to be the hard part, is the outlook. Right now, the market is really priced for a very brief interruption. If this interruption continues into the summer and, God forbid, into the fall, then you're talking about a repricing that would have to happen even in some of the sectors that have already been hit. Right now, earnings are expected to be terrible in aggregate across the S&P 500 for one quarter. And then they're expected to continue to claw their way back out. And by the fourth quarter, most of the sectors are expected to be positive. That is what's priced into the market right now.
All right, so let's talk then about what exactly is not priced in. This idea that you could have another wave, if you will. There's a slight bit of optimism building right now that there's a plateauing in certain key U.S. hotspots and global hotspots with regard to cases per day, deaths per day, that sort of thing. Is this something where the market can feel a little bit more comfortable about that plateauing, or could we see something else develop with the coronavirus that leads to another leg lower in markets?
Well, I think what you have to see in order to get us up and out of this confidently is you have to continue to see better tracking, better testing, a better ability to maintain and to keep this coronavirus contained without lockdown mechanisms, because obviously the lockdown is costing us economically. It's a tremendous expense that we are bearing, and not everybody's bearing it equally. What is not priced in on the downside is that we do get a second wave, that it takes longer to get a vaccine, that there are any number of sort of terrible scenarios that really kind of amount to an elongated recovery out of this pandemic. But if you look historically at pandemics, they normally don't last a long time. And I think that's the main reason why the markets are priced the way they are.
All right, so they're priced the way they are. There has been a nice bounce off of the lows that we've seen, and that could be because the investors and traders are looking beyond the pandemic right now. If you take a look at the overall picture for what types of industries could be poised to benefit more, what goes on your shopping list right now?
Well, obviously there's cheap, and then there's cheap for a reason. I mean, you look at the cheapest stuff right now, you're looking at energy and financials. And, the question is, what are the banks going to have to take onto their balance sheet as a part of all of these loan programs, and will they be able to make any money in the process? What's interesting about this, Dom, is the whole point that I mentioned, that the whole market is pricing this to be a very short-term experience, is even the yield curve is actually pricing that way. In fact, the yield curve has actually gotten quite steep. And theoretically speaking, that should be a benefit to banks. Now, with rates this low, that's challenging. But, banks right now are priced. They're the absolute cheapest part of the market. And I think it's a part to watch.